Crude rallied yesterday, with Brent climbing more than 4% and WTI up more than 5%. Traders expect OPEC and its allies, which include Russia, will reduce output by more than 1 million barrels a day. OPEC sources telling Reuters voluntary cuts by individual members could come on top of this, making it the group's largest cut since the start of the COVID-19 pandemic. Joining us right now is Amrita Sen, Energy Aspects founder and director of research. And Amrita, you've been saying for a while that prices were going to come back. This is the beginning of that. What should we be looking for tomorrow with OPEC?
Like you said, I do think we will see a cut from the group. Obviously, the magnitude of the cut is still being debated. I'm also expecting potentially some unilateral cuts on top of that. But I do think in terms of the group, and particularly for Prince Abdulaziz, this is a defensive move. Very worried about the macroeconomy, what a stronger dollar does to emerging markets. So getting ahead of it rather than allowing inventories to potentially build if demand were to actually fall. So again, it's quite proactive on OPEC's part, but equally, it is very much something he's been talking about since the last few weeks, this disconnect between the physical and the financial market. He wants to provide a floor to oil prices so that investors at least find some level of comfort in going or coming back to the oil market and going long. Because right now, the meltdown you're seeing in the macro space, which you guys have been covering, that makes oil very hard to rally.
We've heard a little bit about this difference between spot price and the physical market and what that means. And obviously the strong dollar aggravating some of that. You want to explain what that means for these producers, what they're actually getting versus what we see and what the price we're paying at the pump?
I mean, look, ultimately the producer gets the physical crude price depending on what the grade that they sell. But even if, let's say, Brent prices are, call it $90, you could have some grades trading well above $100. We've seen that in the summer when the disconnect was almost $30 between what the price on the screen was versus what producers were getting. But at the end of the day, any grade, including Saudi Arabia's or Kuwait's or UAE's grades, they are still benchmark, right? They are versus Dubai or versus Brent. So that is still ultimately the floor. And then on top of that, you can get a premium or a discount. I think the one thing to bear in mind is that we haven't ever, I don't think, seen a market where the backwardation has remained this steep, which suggests that the market is strong and we're drawing stocks, and that flat price has come off, almost $30 from the highs, or $40, I would say, from the highs over the last couple of months. And I think that really tells you that there is a disconnect between the physical market, which is still relatively strong, may not be as strong as the summer, but still strong and drawing stocks, versus what investors are fearing and therefore just shorting crude.
They may be looking at this as, look, energy prices have come down pretty sharply in a short period of time, 25% over the last quarter. But in the West, this is being interpreted as bowing to Russia's needs to have more funding to finance a war against Ukraine. This is being looked at as much more than just a protection of your markets. Does that go into their thinking at all?
I mean, look, from OPEC Plus's point of view, Russia is pivotal. I think they do have a very good relationship right now, the GCC and Russia. Also, just talking to the ministers, I really don't believe they think Russian oil will disappear even after the EU embargo. They believe Russian oil will stay in the market. And yeah, they do think the West the West kind of, whether it be sanctions or embargoes, that's just creating more disruption. I think OPEC particularly believe that that's one of the big reasons why investors are staying away from oil, because of all these government interventions. So yes, there is an element where they do think part of the problem with the market in terms of the physical versus financial is to do with the West's kind of policies. But I don't think that's kind of the driving factor over here. You know, the driving factors still are more fundamentals and more kind of getting defensive ahead of. Yeah.
Right. They don't care about it from a defensive perspective from the United States and European countries that we look at.
Correct.
This as a, right. Amrita, thank you. We'll talk to you again soon.
And coming up.